this overview of products contained within ESS BIZTOOLS. Today we're going to be looking at the early stage innovation company. I've clicked on component as I was just giving you that introduction, and we're now going to go through to download the content on the early stage innovation company. The first item we should look at is the procedure control form, because as I indicated yesterday, there is a procedure control form for each of the ESS BIZTOOLS products, which will guide you through. This first of all gives you the process, and we go into some marketing material. Then there's some guidelines on preparing a quotation to undertake this type of work. And then there's the step-by-step processes utilising the business advisory service forms and the papers, etc. We go back to the list of material. I now want to go to the early stage innovation company calculator, because this is a key document to help you assess whether your client might be eligible for this process. This is the form now, and we'll just go back to the beginning. The first test is to determine whether the company qualifies, of course, and we need to know 100% subsidiaries, ACN number, date of eligibility based on the date of incorporation. The first test is for companies under 3 years of age, and they need to have expenditure not exceeding $1 million and income not exceeding $200,000, unless it's a grant from the Accelerating Commercialisation Grant, which has now expired, but obviously applicants for the status of early stage innovation company could be quoting that they've been a beneficiary under the Accelerating Commercialisation Grant for the next couple of years. I assume that the government will be amending the legislation to include the Industry Growth Program alongside the Accelerating Commercialisation Grant. We can then move on. If you don't qualify under the 3-year rule, companies up to 6 years of age can qualify, and there's terms there for them. And in some cases, a company that's only been registered on the Australian Business Register in the last 3 years can also qualify. So you can work your way through that and decide whether your company's going to meet the requirements of that first test. The second test now is a choice. You can either go to the gateway test or to the principles test. If your client's a fairly new company, I'd be suggesting you go straight to the principles test, because the gateway test is assuming that there's been activity within the company. And I'll show you that in a moment. But you can do both and see how you go, first of all, with the gateway test. In the gateway test, the company must earn 100 points. There's points for various activities that we'll just quickly go through. First one considers research and development. If the company has spent more than 50% of its expenditure on legitimate research and development for the research and development tax incentive arrangements, then the company earns 75 points. Nearly there. I'm trying to achieve 100 points. If the company has spent more than 15% and up to 50% of its expenditure on research and development activities, it will gain 50 points. If the company has been admitted to the Accelerating Commercialisation Grant Program, and one would assume now also the Industry Growth Program, the company will earn 50 points for that. If it's been admitted to the Accelerator Program, it earns 50 points. If the company has already raised more than $50,000 from arm's length investors, it earns 50 points. And so it goes on. So at the end of this process, we're going to determine whether the company has aggregated 100 points or more. And if so, you are adjudged to have self-assessed for that client under this process. You can then complete all the documentation, but you don't need to submit it at this stage to the Australian Taxation Office. You have to do that after the end of the financial year. The applicant, though, can then move on to the principles test. So if you only get 40 points, you can move on, and you never indicate to anyone how many points you did self-assess at. The principles test has 5 key questions. Is the company genuinely focused on developing for commercialization one or more new or significantly improved products, processes, services, marketing, or organizational methods? And you need to supply more than a yes/no answer. My advice is about an A4 page at least. Is the business relating to those products, processes, or service got a high growth potential? Can you successfully scale that business? Is it going to appeal to broader than the local market? Can you demonstrate that the company has the potential to be able to have a competitive advantage? You submit those answers with the additional information that we've specified in the forms, have that lodged with the Australian Taxation Office, and the ATO and Oz Industry review that material and submit an answer in about 6 weeks as to whether the company has been admitted to the Early Stage Innovation Company program. So that's the form, and obviously if you are a subscriber to ESS BIZTOOLS, you'll be using that form a fair bit. The next item I just want to show you is a paper that we have developed, and the first one is the paper on the Early Stage Innovation Company. We've got slides, we've got papers, we've got a lot of information here to help you on this process. This is a paper that summarises what the arrangements are. So you can send that to a client, sit down and talk to your clients, but most importantly, initially, make sure your accounting team members have been trained in this aspect, so they're on the lookout for companies that might qualify. So there's those various points that I was referring to earlier. The next paper that I want to show you, though, is the tax incentive for early stage investors, because this is the second part of this program, and that is the investors get something more than a share certificate in this company that they've invested in. If the investor is classified as a sophisticated investor, they receive 20% of their investment as a tax credit to come off their own tax assessments, up to a maximum of $200,000. If they're a retail investor, they receive 20% of $50,000, which is the maximum investment that a retail investor can make in any one early stage innovation company. So they earn a maximum of $10,000. But then they also are eligible for a capital gains tax exemption on those shares that have been allocated as part of the early stage innovation company assessment process. If they hold those shares for longer than 12 months and less than 10 years, they don't pay capital gains tax when they sell those shares. And at the end of the 10 years, if they still own the shares, the company is revalued and they have a new cost price allocated to them on the investment in that company. So that's a brief overview of the early stage innovation companies, which is great for new companies to be able to raise capital from the market. I would urge all accountancy firms to be very familiar with this legislation, because this gives you the opportunity to talk to your clients and show them that you're able to assist them. So thank you very much, and I'll talk to you later on.